Many of the world's leading economies are currently facing great risks of economic woes like recession and stagflation. According to the United Nations Department of Economic and Social Affairs, only a few countries, mainly in East and Southeast Asia, including China, Japan, Indonesia, Thailand, and Vietnam, have yet to announce their intention to tighten their monetary policy stances. Several other countries, including developed and emerging economies, are raising rates in an attempt to bring down record high prices, which have been largely influenced by the ongoing global energy and food crisis. However, even after raising their benchmark interest rates by hundreds of basis points, many of these countries are still unable to achieve this important aim. In addition, many economies are now showing the beginning signs of recession. According to the United Nations, the world may soon be teetering on the edge of a global recession, only 2 years after the last one. So, how do the markets perform during a recession? Firstly, stock prices typically plummet. The markets can also get volatile, with share prices experiencing wild swings, especially as investors are wont to quickly react to every bit of news, either good or bad. Though these are regular experiences for cryptocurrency investors, everyone still wants to know how a severe economic decline will affect Bitcoin and the rest of the cryptocurrency markets. In a recent interview, Bitcoin advocate and macro guru Lyn Alden attempts to answer this question by analyzing how Bitcoin has performed generally during periods of economic decline. Please watch, like, and share this video as the veteran investor gives her candid opinion about what you can expect from Bitcoin during this period of economic downturn. You can also drop your comments and observations in the comment section and subscribe for more videos like this. Thanks, and enjoy the video.
Well, so we had a recession officially in 2020. It was a brief one. It was an unusual one. And obviously Bitcoin did do briefly terrible. I mean, Bitcoin collapsed, pretty much everything collapsed and then went back up. If we look at it in terms of, say, economic cycles, so PMI cycles, so rising and falling, periods of economic acceleration and deceleration, which are not necessarily inflations, but can become, they can become recessions, but are not necessarily recessions. Generally, we've had an environment where Bitcoin does better when economic growth is accelerating, and it's generally done poorly when economic growth is decelerating. And so that would corroborate your view that it generally does not do well, at least in the early phases of recession. Another big thing that it's correlated with is global liquidity. So if you look at global money supply, global M2, broad money supply, and then you translate it all back to dollars, because that's kind of the chief funding currency of the world. That's kind of the unit of account of international trade. And so if you translate it all back into dollars, there's two obviously variables that will impact that year-over-year figure. One is how much printing is happening, basically how much are different currencies expanding their money supply, and then two, how strong is the dollar relative to those currencies? Because when you translate it all back into dollars, obviously the strength of the dollar relative to those currencies will matter. And generally speaking, and this is actually a pretty tight correlation, when global money supply measured in dollars is going up pretty rapidly, that's a great environment for Bitcoin. When it's going down, when basically that year-over-year rate is rolling over or even stops growing entirely, that's usually a pretty bad environment for Bitcoin. And in that sense, what Bitcoin is hedging is not price inflation, but monetary inflation, or debasement, we can call it. Basically, it's basically one of the more pure plays on liquidity. And so I think that's probably the key thing to watch, is what's happening with liquidity and what's happening with the rate of change of economic growth. And so I do think that when you have falling liquidity and economic deceleration, yes, you'd expect Bitcoin to do pretty poorly, which is what we've seen over the past, especially the past 6 months. And then when you have a bottoming out of liquidity, monetary easing, and you're kind of in the middle of the recession, maybe turning up, that's when I would expect probably Bitcoin to catch a bottom and do pretty well.
From Lyn Alden's explanation and what we've seen so far, Bitcoin performs better when economic growth is accelerating. The opposite is happening right now, which is why Bitcoin has been stuck between the upper 22,000 and lower 23,000 range for a while. But that's just in the short term. If you zoom out a little, you can see that there is more evidence that supports holding Bitcoin even during severe economic declines. The largest crypto asset was formed in the crucible of a huge financial crisis to stop people from being caught in the widespread failure of the traditional financial system in the United States. So, even if it is down 60% now, it is still a worthy investment for investors in countries that are currently battling insane, record-high inflation. Take Venezuela as an example. In 2018, the country's annual inflation rate reached 929,790% and was expected to go even higher. Though it dropped to just over 1,588% in 2021, It is still almost unimaginable to have such massive price increases within a year. To put it into perspective, dispute the current price gains in the US, inflation is still only up by 9.1%, 15% if you're going for the unofficial figure. There is no telling what country will be next to face such severe economic conditions, especially not with the way policymakers handle monetary policies. If there is an asset that will prevent such unpleasant events, investors will give themselves the perfect gift when they add it to their portfolios. IRA allow you to save for retirement in a tax-advantaged way for greater financial security with lots of tax advantages. But most IRA offer the same boring stocks and bonds. Introducing iTrust Capital, the #1 crypto IRA platform in America. iTrust Capital allows cryptocurrency investors like you to enjoy all the exciting benefits of tax-advantaged retirement accounts. It combines the traditional IRA with the new, exciting world of cryptocurrencies. Why should you use iTrust Capital? It is the best crypto retirement platform in America, with some of the lowest fees of any cryptocurrency IRA platform. It gives investors adequate exposure to some of the top cryptocurrencies like Bitcoin, Ethereum, Cardano, Solana, and Polkadot. You can buy and sell all your favorite crypto assets while enjoying amazing tax-free gains. It is adequately secured by Coinbase custody with a $320 million insurance to protect against theft. You can easily roll over an existing retirement account or begin a new one when you register on iTrust Capital. iTrust Capital is the trusted crypto IRA for many American investors who love the crypto industry. To join the millions of Americans who use the platform, please click on the link in the description box below. What do you think about Lyn Alden's interview, and what are your thoughts on the role of Bitcoin during periods of economic decline? Please drop your replies in the comment section below and give this video a thumbs up. Thanks for watching.